All right. Good morning, everybody, and welcome to another Engineering the Markets. All right. Good morning, everybody. We are all set and good to go this morning. So, as always, welcome back to everybody. It is Tuesday, March 22nd, 2022. My name is Jared, and let's take a look at some of the activity yesterday. So, market, and we're looking at a short-term time frame here. I've got a 10-day, 30-minute. You could pull up something like an hourly chart just to kind of see some of the behavior from yesterday's session. Lots of volatility. We did have some intraday back and forth trade that I'll kind of cover briefly. First and foremost, the market was unable to continue its stronger advance on yesterday's session. We had a bit of a consolidative or pause in the overall bullish momentum. But the uptrend does continue, and that's pretty evident in regards to an hourly chart, where even at the lowest print, we're looking at an hourly uptrend that possibly just back tested its swing highs. So we have sort of this lower bound in the uptrend. And if we look at the past couple of days, this is an upper range that is forming in the S&P as we're trying to break out from, for example, Friday's close. A very relevant close for the S&P because we actually, on the session, closed flat. Very sort of indecisive type of day, quote unquote, with the dragonfly style doji candle. And ultimately, the open and the close were in line with Friday's close. So some of that volatility coming out of continued discussions with Federal Chair Jerome Powell. One thing we might want to consider is Jerome Powell is going to be speaking more often this week especially. And there are ways to kind of look up these events. See if I can pull up that real quick. I might have to grab it off to the side here. But knowing about some of these events, it obviously shook up the intraday session. We can look at a 5-day chart, or sorry, a 5-minute chart to kind of see that volatility. And that was more or less this sell swing that we got as the market was coming off of essentially a V bottom sort of intraday look. And this volatility, at least on the intraday, has not really been seen recently. Usually when the market chooses its trend for the day, that trend has been essentially the directional bias for most of the session. There were some opportunities to maybe top fish or maybe just kind of speculate for Friday's area and Friday's close to be a relative high. Bears obviously got rewarded in the morning session by some of that sell-off volume. But as we can see, the downtrend that could have formed from that really wasn't as clear intraday, as the market provided essentially a V bottom off of some relative pre-market support. We got pretty close to testing the high of day. And then, of course, some information from Federal Chair Jerome Powell to kind of shake up the market once again. So all in all, knowing about these events, I'm having trouble finding the actual link, but I'll go ahead and grab that off to the side. Knowing about these events and understanding that we're in a market right now that is affected by some of these decisions. So we have a market that is sensitive to catalysts of this nature. And more importantly, anytime we see any discussion about the potential or the idea of the federal fund rate having an accelerated or an adjustment to the schedule of rate hikes, we often see the market respond. So let's take a moment to discuss the federal fund rate this morning and also how to interpret it as a market participant. First and foremost, what is the federal fund rate? And one of the easiest things you can do is start to look up the key definitions of what this actually represents for anyone who is affected. It is the target interest rate set by the Federal Open Market Committee. The target is the rate at which the Fed suggests commercial banks, so your JP Morgans, your Goldman Sachs, any large, industrial or industry standard banking institution will have to adhere to these rates. It's the rate at which they borrow and lend their excess reserves to each other overnight. So whenever you're a bank, whenever you have the obligation to store some of your customers' cash, your reserve, banks do not have to keep everything that their customers are allocating to the bank inside of a reserve. The idea is that they usually have to stay within some bound. So for example, if a bank has 100 customers, all with $10,000 in their account, that leads to the bank essentially having $1 million worth of capital allocated from their customers. But the bank doesn't necessarily have to keep $1 million on hand. They may have to be somewhere in between 5 to 7%. And what that looks like is their capital reserves, which in this case is what the federal fund rate directly affects. Every night, so the overnight sort of repo session, banks are in communication to basically negotiate whether or not they want to buy and sell other banks' capital reserve. So for example, Bank A might have an excess of capital and they don't necessarily need to keep it. So they want to sell it off and obviously make some money in doing so. Bank B might be under their capital reserve and they instead need to be searching for the best deal, which is what banks are offering some of their reserve and what rate are they offering it at? You know, how much do I have to pay extra to buy back some of that reserve and get to my minimum for the overnight session? So what this means is that every night this federal fund rate is in effect. Banks are communicating, and what the Fed is responsible for is setting up the range or setting up the overall bounds at which banks can decide to negotiate. Obviously, if a bank is asking for too high of an interest, their overnight reserve might not be bought out by other banks, at which point they may have to sell it at a lower interest rate and potentially even sell it back to the Federal Reserve, which does have its own discount rate, which is discussed a little bit further down in this sort of short-term article right here. So the idea being that the Fed does want to encourage banks to obviously work through their reserve excess or lower bound. And in doing so, this back and forth communication between banks is how the repo market, in essence, works every single night. There's more to it than that, but this is a good way to kind of get started in understanding how this all behaves and what it directly affects. Now, recently, we got a change in the federal fund rate. On the March Fed's FOMC meeting, they decided to raise the federal fund rate by 25 basis points. So whenever we see these adjustments, it's important to understand where we're coming from. Obviously, we were set at 0 to 25 in the federal fund rate, so we were basically at 0. And banks were still doing this back and forth communication every night, but their interest rate that they could sort of negotiate between was relatively low. Now that this has been adjusted, banks have a new bound in regards to what they can negotiate between each other. And part of this is a bit of a draw for banks to essentially make more whenever they have an excess of their reserve balance. Now, in order to get this excess, obviously you need customer participation. You need basically people interacting with your bank. Ideally, in stronger economic conditions, you're going to have more people borrowing money from the bank and essentially using that capital outside of something as simple as just storing it in some sort of account. In weaker conditions, usually the lending tends to be withdrawn somewhat. People are less likely to open up fresh loans. And obviously the interest rate is somewhat impactful of that because people want to borrow whenever interest rates are relatively low. They want to borrow cheaper debt and essentially pay it back whenever their payback schedule and their pricing for their debt is relatively low. So as this fluctuates, obviously the sensitivity to that, the consumer sentiment to these adjustments, and some of the ripple effects that can take place if we start to see this become scheduled and even more aggressive is what the market can be sensitive to in short to medium term cycles. So all this said, yesterday, Jerome Powell discussed that the current schedule for rate hikes might become a bit more aggressive than what was currently priced in by the market. Now, whenever I say priced in, I have to kind of quantify that. I have to give it some numerical value because priced in is arbitrary without some underlying data. So I'm going to start high level at how a lot of people maybe see these expectations of rate hikes and when they're going to occur, probabilities and the modeling of all of this. And then we're going to take a quick look at the underlying product that actually derives these numbers. There's an actual futures product that shows adjustments to the probability of the federal fund rate and what people are projecting for particular FOMC meetings. So without further ado, let me shift over to a pretty common tool, which is the Fedwatch tool provided by CME Group. Now, let's see, go to the actual tool here. This is the user guide. Hopefully this loads. It's having a little trouble loading it earlier, which is why I should have kept it up. Here we go. I think I just have too many tabs open here, so give me a second. Let me pull up the one that's already loaded. Okay, so this particular tool is basically a nice UI for visualizing some of the background probability modeling that's going on with the Fed fund target rate. What we've seen over the recent meeting is the first rate hike in an anticipated rate hike cycle. As we started the year, this was becoming more and more concrete. Market participants were starting to discuss the inevitable rate hike cycle for the year. And as of currently, we're looking at anywhere between 7 to 8 rate hikes all of which should be about 25 basis points. And we're mostly looking at when and where those rate hikes are going to occur. There's only so many FOMC meetings. That's when those decisions are often made. And unless there's some dramatic economic event, they're often going to stick to those monthly timeframes to make those adjustments, basically to have an expected timeline for rate hikes. So currently, what we're looking at least on the default page here, is an expectation for the May meeting, May 4th, 2022. And what the market is pricing in here, based on the bar chart, is the probability of a second 25 basis point rate hike. As of now, that probability sits at about 38.4%. Now, what you'll notice here is there's actually a higher probability by this meeting that we're looking at a double rate hike, which essentially means that by this meeting, the federal fund rate, instead of sitting between 50 and 75, would now be sitting between 75 and 100, which is essentially pushing it up to 75 basis points from our starting point of 0. So whenever we look at these probabilities and we could start to see how the market is pricing them out in time. Obviously, we're starting from late March, early April. So as we move forward, the market knows that the probability of basis point hikes per month has gone up. They know that pretty much every month we're looking at least a 25 basis point hike. So as we move out into June, something like 100 to 125 becomes 38%. 125 to 150 becomes 61%. It's much higher. Move out into July, we just repeat this cycle. And as time goes on, there's more and more uncertainty. So what you'll notice is that instead of one or two specific ranges that the market is trying to price in, there'll actually be a couple of ranges, because essentially, if the market has priced in a probability of a double rate hike earlier, then the probability of 2 double rate hikes starts to increase further out in time. And that will affect whether or not the target fund rate is affected out in July, leading up to a low probability, but a probability of 200 to 225, which would essentially be a move of 200 basis points. And then, of course, we just kind of continue this out. What you can start to do is you can actually see out in December, the market is starting to price in the eventual schedule for the rate hike discussion for this year, which at this moment has the highest probability of being somewhere between 225, 250. And this looks essentially like a bell curve. There's obviously a high distribution, a very standard deviation range of what is the most accepted, highest probability event. But there is a tail on both sides, and they're essentially equal. If the market sees maybe an outlier case where the rate hike doesn't have to be as accelerated, we get a low probability that we stay between 175 to 200. If we get an outlier case, something much worse happens. They have to push this rate much higher, much faster this year. We have a low probability of getting up to 275, 300. And then, of course, the side bounds, these are sort of your standard deviation bell curve model of how this is priced. So when looking at all this, it's a lot of data. It's a lot of interesting probabilities that the market is trying to price in for equities. They're trying to interpret how this affects underlying companies' borrow rate. They're trying to interpret what this does to the financial system directly, banks and other institutions that work off of this model. And then this is not an isolated system. This obviously has secondary and tertiary effects for the market. So what's great about this is it's very visual. It's very easy to kind of say, okay, by November, the market interprets that 200 to 225 is the highest probability. What you can also do is start looking back in time. You can do things like comparisons. And I won't go into the nuance of all this, but you can start to see that over time, these probabilities have adjusted. They're not a static system. The market interprets news, different economic events, what Jerome Powell says, what other Fed heads say about the market, about the economy, and they start to price this in over time. Obviously, with less time, probabilities become more certain, and you tend to get things a little bit more solidified. But all in all, this becomes something that is constantly in shift. And what's so interesting is that last year, this was almost a non-event. The market essentially was pricing in no rate hikes. So last year, not many market participants really had to utilize this information because, historically, and this is just kind of showing probabilities back in, let's say, November. This is kind of how far this thing goes out. The probability was essentially zero that we were going to get a rate hike by November. It had spiked up in March, April, May. This actually shows a time graph, but by June, the market basically said no rate hikes, 100% that we're going to be between 0 and 25. And then a little bit of September, if you recall, this is when Evergrande was starting to become in the news cycle. There's a bit of default risk out in China, and some of the affected parties were starting to see some writings on the wall as to maybe the economic stability of countries that have major impacts to the U.S. All of which becomes a little bit of a game of probability. If there's some under the hood issues with your vehicle, the probability of you breaking down becomes higher. Obviously, if you're full steam ahead, you have a very low probability of your car giving you issues, but you start to get low tire pressure, maybe you're running the gas tank a little light, your oil hasn't been changed in a while, things start to accelerate, and of course, the likelihood of certain things happening starts to increase. So what I recommend is for someone new to this information, obviously start small. Understand what the Fed fund rate controls. What does it do? Who's impacted? What does it mean? One, because it's really cool information. Maybe not to everybody. Hopefully I've got people kind of still attentive this morning, but it's information that the market cares about. It's what's controlling certain fluctuations in price. And as we move forward this year, it's going to become more in focus because these probability models are becoming more discussed. More people are starting to understand it, and we're going through a Fed rate cycle. So when we look at this data and when we start to say, okay, well, what does this do to the market in general? And how does it affect the market historically? For that, we have to take a look back. So I'll move away from this. Obviously, if you've been able to grab this URL link, just search up federal fund rates and look up different tools. There's different companies and groups that provide little UIs like this. But also keep in mind this right here, which says contract. Now, the first thing you should be saying is, well, this is a futures contract. This is the format for a futures contract, and we'll look at that in just a moment. But each of these has a corresponding contract, a dated monthly contract in this product, and we'll see what that means for interpretation. But let's take that high level overview. Let's say, for example, I wanted to model the federal fund rate. And what does it do to the market? So first off, kind of want to do this on a longer time frame. I don't want to have any studies. And because this is individual data points, it's not necessarily a continuous graph. You may want to style this more or less like a line. So you can kind of see, you know, the upticks and the downticks a little bit more clearly. Additionally, I want to compare this with the S&P. So the easiest thing I can do in this tool is I can add a comparison to the SPX. So all I've done is I've shown the federal fund rate and changes in that basis comparative to the S&P performance. We can go out to weekly, we can even go out monthly. We can go out as far as we want. This has data back to 1955. And what you'll see is that on the longer time frames, there are some fluctuations, of course, but in general, whenever we see the beginning of a federal fund rate hike, the S&P tends to outperform. It tends to be relatively bullish. As this increases, and as this is a steady increase, this is more important than just it rising, is actually the rate of its rise. You can see that over, for example, 2003 to 2006 and 7, federal fund rate was going up, and the S&P was in a bullish mode. It was obviously recovering from the tech cycle, the tech.com bust, but overall, from a performance standpoint, it was more bullish than bearish. This is also true historically. There are other examples out in time. Rising Fed fund rate, S&P maybe having some correction before, maybe a period of lackluster performance, but the eventual uptick and the rise once again. How about more close in time? How about we kind of zoom in? Let's ignore these historical examples and look at the most recent one, which has started back in late December of 2015. Well, guess what? The S&P did have some volatility, but we did see new all-time highs as the federal fund rate started to climb. The S&P actually cycled higher until topping out and seeing a massive downdraft before the Fed stepped in COVID and adjusted their federal fund rate up from a top of about 250 basis points, 225, 250, back down to zero. So you could argue here that the federal fund rate and the rise, so long as it's steady and known, I would say the idea here is the lack of uncertainty. If that does take place, the market's response historically has been somewhat bullish. Market has gone up. The question remains, however, what we heard yesterday was that this might accelerate a little bit. And this volatility that we may experience in between, especially when you're looking at time frame, we're talking about multiple weeks, even months, where the S&P does not make fresh highs. The all-time high has been set for now. We sort of have that as our earmark. But the S&P can experience waves of buying and selling, back and forth price action, as we start to come from a zero Fed fund environment and go higher and higher, obviously with a target of approximately 250 basis points. That is what that tool observed out in 2023. When we get to 2023, the highest probability was about 250 to 275 basis point hike. So that's where we're looking, that's where we're headed. And of course, what's not known now is the changes in probability over time. So really simple exercise. The idea here is that this is historical data. The S&P is comprised of similar companies back in 2015 compared to now. But the further out you go, if you're using the S&P, you need to understand that the market cap weightings were different back then. What was the most highest concentrated sector of companies back in 2007? Does anyone know? The answer is actually pretty straightforward. It was actually banks. So the shift in the S&P and the difference in construction of market cap weighted companies will affect historical data. And you need to recognize that when looking at these simple comparisons. But on a general scale, typically most people will agree that a rise in the federal fund rate, a known, expected, and I would say sequential rise, tends to be relatively bullish for the market. So this information is for us to interpret and for us to certainly navigate as the S&P is coming off of its correction. We'll see what sort of volatility remains with other geopolitical risk, but this is something to add to your analysis tool. And it's obviously going to be something of importance for the remainder of this year. So with all that said, we'll look a little bit further at this tomorrow. I'm running out of time, but it's a good way to get started. Obviously, do your due diligence. And I've offered a couple of ways to interpret this just to get, your feet wet overall. So as always, trade safe, stay tuned for pre-market prep, and we'll talk more tomorrow, and keep it green as always. So.
Here we go. All right. Good morning, everyone. Welcome to Pre-Market Prep. I hope everyone's having an amazing morning. Hopefully, you guys had a great day yesterday. Good morning, Norm. How you doing today?
Hey, good morning, brother. I'm doing well. How are you?
Doing good, my friend. Glad to see you have power and that things are somewhat okay in your area.
Yeah, it was a little rough around here last night. Luckily, the storms chilled out just a little bit before they got to me, but there were some people on the other side of the Metroplex that got hammered pretty bad. So thoughts out to them.
Yeah, absolutely. All right, guys, let's get into it this morning. Good morning, everyone. Happy Tuesday. Let's look at the stuff we had yesterday on deck. We had Baba on here, which again has been one that's been extremely active to even today, already up 9.5. A lot of the Chinese stocks gapping up. We'll get into that in just a second here. But let's look at yesterday's action. Look at Baba here, guys. Popped up pretty nice, and then a beautiful sell-off all the way down to 99 from like 105. Another V reversal right back to the VWAP, and then some more movement upwards. I mean, it's just been wild, this one here, on both ends, long and short. Here's Neo, guys. Neo was a short the entire day yesterday, well, the entire morning, excuse me. Pre-market action was really clean, really strong. Gave a lot of that back into the market open. You can see how beautiful this short was. And also, it's a great reversal. You saw how Andrew caught this trade yesterday, catching this nice reversal back towards the VWAP there. So beautiful trade there from Andrew. Here is Oxy. Oxy again. I love Oxy's action in the pre-market. Absolutely nothing going on, and then it just does this right at the open. Just takes off. A beautiful pop here. A great continuation. Never really looks back, and then just kind of doesn't do a whole lot after that. You don't get a great reversal, but it just kind of sells off a little bit towards the later parts of the afternoon. Here's PDD, which again, not one of my favorites, but even yesterday, they also managed to trade very well to the short side. So a lot of weakness here at the market open, a lot of indecision with these candles. And then look at the drop you're getting here. Once you got this drop, you knew it was not great. You got a beautiful pullback here if you missed the entry, and then just look how beautiful this thing grabs on to the 9 moving average, testing the 20 a couple of times, but for the most part, it was a short the entire day. Whatever it built up in the pre-market, lost it the entire day there after the market opened. BA, as we know, had the unfortunate news of a 737 crashing, the 800 at the max. So, more information is coming out on that, and it's one of their safest aircraft. So there might be some talks about, what really happened here. We won't know that for a while. But right now they're pretty much flat. Little bit of volume. We'll see what they got going on. But yesterday, pre-market, they had a lot of movement at the market open. They didn't really sell down. This is what I was telling you guys. Be careful on having a short bias just yet on this one. There's a lot of information still pending before Boeing decides what to do here. Here's Apple, guys. Apple yesterday was it was a little bit all over the place compared to the other stuff we had. Look at this pop, look at this drop, and look at this pop up right back up to the highs of the day. And these are not small moves. We're talking about, $2 at a time, $3 up and down here. So just interesting action on Apple yesterday. Again, I don't know what to make of it, but we'll see what they do today already with 570,000. A good one to keep an eye on. So that's what we had. A couple of other ones on there, like Tesla were very active. And GameStop was not great, but we had some pretty good action on the main list. All right, let's take it over to Norm, the latest and greatest on the SPY, with all these Chinese stocks gapping up this morning.
Yeah, a couple of things on the China story. So yeah, as you mentioned, a ton of China on the list. There's one story there we'll talk about in a second. Then we have a couple of earnings there. Nike, for instance, is one of them. And then some crypto Bitcoin stuff. So you see Mrna, Riot, things of that nature. So the China number one, two things there. Baba just announced they're increasing their share buyback. I think it was originally $9 billion worth of stock. They've increased it to $25 billion. And the Chinese government is going to essentially inject some liquidity into small, medium businesses in China, helping prop up their markets. There is an article I posted that you can go to CNBC and look at it. It is about how China property developers and real estate, they are, even though they are required to report results for last quarter by the end and the full year by the end of this month, many are coming out and saying they're not going to be able to for various reasons, but it's very suspicious that a lot of them are. Evergrande happens to be one of them. I know Jared touched on that a moment ago. Speaking of Jared, if you're on YouTube, give him a thumbs up. Much appreciated. Yeah, so there's some worry about their audits, and they might be a little fishy, but check that article out. If you scroll all the way up to the top of the chat in the room, you can also find it. I posted it up there earlier, but yeah, so China's doing that. I'm a little concerned what's going on there. And other than that, we've got a couple of Feds. We got 3 Fed speakers today scattered throughout the day, but no data really coming out.
All right, excellent. Thank you, Norm. All right, guys, let's get to our list this morning. As we mentioned, our gappers list has a lot of the Chinese stocks gapping up this morning. We see Mrna and Bitcoin on here, so as Norm mentioned, we have Nike, a whole bunch of stuff here, XPEF, Leave, Neo, all in the green today. So again, kind of positive stuff for them. And then on the gapping downside, I'm not seeing any of the bigger names that we've been trading lately. A couple of low flow stocks here, 2.6, 6.1, 5.1. This Pike has been, on and off the list. So a lot of these just kind of taking a hit this morning. But looking at these tickers, they don't look too great. So let's get into the details and see what we got going on here. Remove our list from yesterday. Control A, Control X. There's a few we're going to keep on here, which we know off the top of our head already. It's going to be Baba, of course. They're definitely in play. Neo is looking pretty good here this morning, so they're in play as well. Let's look at some of the Bitcoin stuff. So we see Mrna is up 5.2, which is a big pop for them today. Riot as well, up another 4.4 this morning. Maybe Mrna today could be the day that we get some good movement out of Mrna. Let's get our daily in here on it. So daily looks good, breaking out of this 28 area. Yeah, we're gonna add Mrna today, guys. We've been keeping it off the shelf for a while, but today it looks like a decent day to have on the list there. I know Nike had earnings last night. I know that because Ed had a monster trade on it. So you can see here they're up 5.1 this morning, and yeah, worth adding on here again. Nike can be a hit or miss. even with earnings, it can be a little slightly difficult to trade, Norm. I mean, we've seen that many times on it. We'll see. We'll see what happens. Might be more of a possible, but they're definitely in play this morning. I know a lot of you guys gonna like JD as well. I have Baba, but JD is another one that can trade very decent, especially with all the Chinese stuff going on. Becky, I'm not a big fan of, guys. So I'm gonna keep this one off the list. Billy is another one that's popping up this morning. But I already have Baba, I already have Neo and JD. So I think that's enough for my list right now. So what is KC? What is this one? KC Kingsoft Cloud Holdings.
It's a Chinese cloud company.
Okay, yeah, we'll keep that off there. It's funny, all these Chinese companies. I watched the Chinese Hustle not so long ago. I know you had mentioned about it, and I started watching it halfway. I couldn't finish it because of the kids, and I finished it 2 days ago. Man, it's scary stuff. I wonder what's happening.
It is.
I wonder what's happening now that they're going to be do a documentary on, in a few years from now. And it doesn't have to be anything with China, but just it seems like every couple of years we see something like that break out, right? So I wonder what is happening at the moment. All right, guys. So we are all set here. I think the rest is the same. We got, again, Bitcoin stuff and all Chinese plays here. You could look at XBET if you like. You could look at Lee. But I got a few already that I like.
Neo over XBEV all day long. It's got like 8 times the volume.
Absolutely. So I'm definitely watching Neo
4
instead.
times the volume.
Yep. And that's all we got on the pretty straightforward on the gapping up list on whatever is strong this morning. Let's see what's gapping down. ZIM. This
So
one.
ZIM is actually not gapping down. I'm gonna clarify this. If you look on your montage, it is up 6 point something percent.
I see that.
So this ticker had a special dividend of $17, and it's ex dividend now. It's actually up because that dividend. So when that happened, somebody asked about this earlier. So I'm gonna just touch on it a tiny bit.
Yeah, please.
Essentially,
because we don't see this often, so it's good that you mentioned.
Well,
it,
I mean, we see stuff that trades without dividends all the time, not to this degree,
right?
But so essentially, if you owned the stock yesterday and you went to sleep on it, you are owed $17 dividend. Whoever buys the stock today does not have that right. So that's why it essentially, when you do that, it's not always the case, but it'll essentially knock down the share price by the amount that the dividend is worth. That having been said, as you can see, that price would have been $71.01 based on the closing price yesterday. It is up 6.5% from there. This has been a very strong ticker recently. So in reality, it's still strong and being bought up regardless. So
right. So if you didn't have that dividends, basically you'll be gapping up over here if that was the case, right? It'll just be moving here. But yeah. So great that you point that out, guys. This is up 6.6, 581,000. This thing has been strong, as you mentioned, Norm. You just look at the daily on here. It doesn't trade very well intraday, though. I'll tell you that much. I don't like the way it trades. The volume on it could be a little light at times. I wonder how this is going to affect their trading today, right? How many people are going to be confused with that?
I don't think that's anything you have to worry about.
Yeah, so I won't be watching either way.
Almost 600,000 shares today. I'll keep this on my list.
Yeah, you'll keep it on your list. Yeah, if you keep it on your list, I'll put it on my secondary. But again, I just don't like the way it trades. It can be so thin at times. CYRN this morning. Got a couple of low flows here. ZYRN. This is no good. Just looking at the volume, it's not there. We need more than that. NRSN had a decent day yesterday. This morning, we're going into our second day. They still got great volume. They're down 10%, though. I don't like the second day trading on these things. You got to be very, very careful. The fun here was definitely yesterday at the market open. You could see how nice this thing ran from $2 to $6.50. So that was fun there. Be careful on the second day, guys. I won't add it to my list. I'm always concerned with those. It could just drop off the face of the earth here. So very, very careful there. OKTA this morning. This one is down 7.3. We have 190 shares, 190,000 shares traded on this one. Pre-market action is okay. I mean, very light on volume, horrible daily. I'm gonna keep this one off. I think we have better stuff on our list this morning. UPST here. This is making some noise, down 6.3, 507. I
Yeah,
usually don't watch this one.
they got a downgrade this
Yeah.
morning, amongst other things. But
Yeah, they're not the best, but they are looking good pre-market, guys. I know someone is going to watch this one. We'll put it on our secondary list. Very, very careful with the risk management on this one. Look at this drop, guys. We're going from let's not even worry about this. Worry about what's happening right now. 120 to 117, right? Just in a matter of a couple of minutes there. So this is not one you want to hang around with and bag hold or have poor discipline on. This is not that type of stock, and careful with the number of shares you take. So they're looking in play this morning. It's just we have to see how this thing is going to trade. Their volume is not it's not bad, but it's not ideal on the daily. Today could be a difference, obviously, with them gapping down and being in play. That volume could be slightly higher this morning. We'll have to see at the market open. Check the spread out too before you take that trade, because that can get pretty nasty pretty fast. The last low flow on the list is 6 million shares flow here. We have Pike. Has been see, now it's not looking good. It was looking good yesterday when it gapped up here, sold off, and now we're below the sell-off after a couple of days run. See, now it's getting to the area where you want to be careful. The fun might be over on this one. Also, the volume is not there yet either way for low flow, so we won't be adding this to our list here. And this is the one that had the news, the big news, right? With the
Disney, right?
Disney,
I
right?
was
This is
out,
that
but
one.
I think it was
Yeah.
they announced a partnership with Disney of some
Yeah.
sort.
So we'll see how that develops. But again, just be careful on this one here. 6 million shares float. All right, that is what we have so far. Norm, anything that we haven't covered that you like on your end?
See if I'll have Boeing on my secondary
Boeing, yeah.
just for a second
Yep.
day. See if it's in play again.
Yep.
But other than that, I'm still looking around, man.
Yeah. So we'll keep going on there, see how that anything comes out on that. That'll be a good one to keep an eye on. All right, let's take it over to the chat room, guys. See what you guys like today. Let's start with Tunde UPST. Yes, we have that one already. Again, it is in play, guys. Down 6.4. Mindful of your share size on that one. We do have BA. That is good. I don't know, Amir. BA has traded very well in the past. Very well in the past. So you do you. Yes, you do you, my friend. But it has traded well in the past. So I do like BA. American Airlines. Now this is looking like trash today. I agree with you there. If you want to see American Airlines, this is not looking good. Guys, it's not really in play. We're kind of stuck within this consolidation right here, but it's not in play today. So I wouldn't be touching that one unless something gets going in the market in the Melvin really, really aggressive. Maybe it'll come in play or any news comes out. But the problem is not the problem. But the thing, if that happens, there's going to be other stocks that you are going to want to watch, like an Apple, like an AMD, like an Nvidia. These are going to react much aggressive to any strength in the SPY in the overall market, in the Qs. Those are going to be the ones that you're going to want to be in if that is the case, right? American Airlines will move, CCL will move, and a whole bunch of other stuff is going to move, but not like these are going to move, right? Your bank for your buck will go a lot longer on Apple and AMD and Nvidia as well. Ben, you can watch that one also. I'll put it on a secondary here. Do they have anything going on? No, they're pretty quiet right now. They are going to get the volume like they always do, right? Apple has nothing going on, pretty much flat, and it already has 612,000 shares traded. If we get any kind of movement here, which by the way, look at their daily on Apple. That is very, very nice. Nothing but strength here, guys.
150 was
that was a
people
steal,
like
man.
that.
Yeah, that was a steal. You wasn't around, I don't think so you were, but that was a steal there, 150. Oof. So yeah, a lot of strength in here, guys. Something will happen with it. We'll keep an eye on it. We just need to see what's gonna develop at the market open. Triple H, Becky, I know a moderator will be watching this. I know Brian loves this stock. You'll be watching this one. I'm not a big fan of this one at all. I think it has its days. Yesterday, obviously, look at this drop here. Yesterday, it's insane. That was fun, but we had a lot of stuff that did that, right? We had Baba yesterday, which I caught a nice move on. Baba sold off real nice, and some other ones too. Neo sold off real nice. So I feel like when this stock does something great, other stocks are doing something great too that are a little bit better to trade. It's just the way I see it, right? But that's a good one to watch. Oxy, definitely. I think Oxy's, finally broke out of this 58. It took them a while, but they finally were able to pull it off. And look at the pop they got yesterday. Very, very clean. Happened like in the first 30 minutes of the day, but really nice pop on Oxy. We'll put this one here Oxy is good to go for us. AGTC offering. Yeah, if it's an offering, it's probably no good. Oh, no, 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 no. Oh, look at the price. No, no, no. We'll skip on that. CCL earnings. Earnings when? Today?
Yeah, they usually announce like between 9 and 9:15ish, I think.
All right, we'll put it as a possible and see how that what happens after that. We'll definitely tune into it. We'd love to see what their earnings are going to report there. JP Morgan daily looks good.
I'll be back to you in a second. I want to find out one thing on that.
Yeah, sure. We'll look at JP Morgan in the meantime. Yeah, pretty quiet right now on JP Morgan. Daily looks great though. I agree. If it gets volume, it looks ready to just take off here.
Yeah.
Yep.
So one thing on CCL, and I thought it was the case. I seem to remember this from the past. They report like really close to the bell, which is kind of rare for things anticipated earnings. Their conference call is at 10 a.m. Eastern, so half an hour into the market open. Just watch out if you're trading that around the open, because they release their pre-written material and financial results. Let's say it's at 9:15, 15 minutes before the market opens. The stock will react, and then half an hour later, if you're in a trade, if they say something that's either against how the ticker's trading, let's say the stock is up and they say something negative or perceived as negative by the algos and the analysts, or especially when they get to the Q&A section of the call,
Yeah.
if they're asked a question they really don't want to answer, it can turn against you. I hate it. I hate trading companies when their conference call is going on during market hours. It sucks.
Yeah.
So
Yeah.
just a heads up on that.
Those computers can kick you out of your position. You could be right, but just sometimes the wicks and the pullbacks that you get will get you out of your position. So careful there. All right. So JP Morgan, guys, we're going to keep it off the list now. I agree with you. The daily looks amazing on that one, but it's just not a whole lot of volume right now. Pali action. What's going on with Pali? PALI. Yeah. More of a penny stock right now. Yeah, we need more info on this. 5 million. We got a nice pop here, and yeah, I'm not sure about that one. Rubber toe. I don't. Again, very, very, very careful on that one. What's up with Plan? Let's take a look.
It's a buyout.
Ooh, nasty. Let's
What's a
move down.
buyout? I mean, it was announced yesterday. We looked at it yesterday.
Okay. Yeah. Oh, yeah. That's right. We did.
Cash by a private equity firm, I believe.
Yep. And there's nothing happening at the moment. mRNA, guys. RNA, if I could type here, we go. mRNA is pretty much flat right now. I mean, it looks good daily wise, right? We're just kind of hanging here. We got to see where we go from here. But again, it's not really in play at the moment. There's just no volume on it unless any news comes out or something to create some movement there. But at the moment, it's pretty dead for the most part. CCL we have as a secondary. We'll have to wait to see how the overall news reacts, how the sticker reacts to the overall earnings today. All right, let's take a look over on our YouTube channel, our friends over here. Let's see what you guys have this morning. CCL is good. We have that one. BA. We have BA here is a secondary as well. So we'll see where that goes. Swing on Apple. Yeah, if you caught a swing off of 150, you're sitting pretty. Tesla this morning. Let's see what's going on. Tesla. Man, look at Tesla on the daily. That is nice. So Tesla's looking good here on the daily. Right now, they're pretty much flat. Got our pop early on, pretty much flat at the moment. Their day looks great, man. We're back at this area where we had some consolidation in the past. Right before we dropped off, we're back right at that 940, 920. It looks good. It looks strong, but I don't see anything heavily in play right now. Could be a good possible, though. Could be a good possible. Let's look at Tesla there. CF. Let's take a look at CF. No. And the reason for that is because it's just look at the pre-market, right? You have 230,000 shares traded. You're not doing a whole lot. Look at the daily down here too, right? You're barely getting 10 million shares a day on your best days, right? You're doing 9 million. For the most part, looks like an average of a little bit under 5 million. So that type of volume on a stock like this, it's going to create some really funky intraday action. I'll give you an example. Let's look at yesterday. In fact, let's look at their best day this week. 9 million here, right? This would have been the day before. Look at this nine. Look at this. You see how bad this is?
It's a
This is just
fertilizer
horrible.
company. I can see a swing thesis on something like this, but for what we're doing
Yeah,
here now.
yeah.
So
Not for intraday trading. I mean, can you get in and make a killing? Absolutely. But sometimes the pullbacks and the spread, it's gonna be so bad. You might not be able to stay in the trade if you're taking a decent amount of share size, right? So it all depends on your strategy here. For what we're doing, this is not gonna fit the bill here. Let's look at DI. No, DD right now, again, 3.6. I love it how DD always puts in this amazing volume, right? Huge volume, and the pre-market looks so bad. I mean, this is just not great pre-market action. Their daily is horrible. I mean, what's going on here? We have a drop, we have a pop-up. It's just really all over the place. Yeah. I again, guys, we look at what we have here. We look at Bob, which Bob is really strong right now, breaking highs. We look at Neo. We look at Mrna and these other ones. I don't see how DD can beat this list that we have at the moment, right? So that's my take on that one, PG. So I'm gonna keep that off the list for now. All right, guys. I think we are pretty much set. Let's head over to our announcements. We'll come back.
I'm point out one thing. We've got time.
Yeah, we do.
So somebody asked, is it? And we try to do Q&A at the end, but I'll hit this one real quick. Somebody asked, is it possible to trade Tesla with a small account? I don't even look at it due to the price, but I'm causing myself to miss out. So we talk sometimes about share prices, and it's more of a preference than anything else. You know, a small account, you're going to have other issues, of course, you know, and we talk about it here, that you have a higher likelihood of being hit by commissions and it eating up a bigger portion of something. But hypothetically, I'm working solely in hypotheticals here. And my answer was sure, as long as you have the money to buy one share. Now, you can even buy partial shares somewhere, but it's all in percentages. It doesn't matter how many shares. It doesn't matter the price. That when we talk about something that's high priced, you know, it's because most of us are comfortable trading in a certain price range for a variety of reasons. I don't like trading stuff that's low priced. I want something that's, you know, $100 plus, usually $100 to $300, $400. I can take less shares, pay less commission, and get the same moves, but you got to think in percentages. So we've seen days, Tesla's moved $100 intraday, right?
Right.
So let's just say, hypothetically, you have, 900-ish this morning. Let's say it's $900. You have one share at $900. It moves it's that $100 day. You don't even have to catch the whole move. So you make $75. You're almost up 10% in your account. So you got to think in percentages, not number of shares, not share price or any of that. Yeah. So just my 2 cents on that.
No, I'm with you 100% on that, guys. So yeah. And hopefully that helps you out there. That's the way to go there. All right, guys, let's go over to our community events and announcements, and we'll have a little more time towards the end for Q&A because we are running pretty early today.
I'll take it one step further even. I think it was 2018. I still joke with Peter if he's in here about this.
Oh yeah,
he'll remember, and he's already knowing what I'm talking about.
Yeah,
Amazon I think was around $1,700. He traded 5 shares of Amazon, and it was over the course of a few hours. And he partialed out each share individually.
Yes, I remember that. Yep.
So anyway. Yeah. So, all right. It's Tuesday, but every Monday night you've got the onboarding session. Don't forget about that. 7 p.m. Eastern. Technology. Next week, we've got already talking about how to utilize TWS for options trading. Should be excellent. It's 8 p.m. Eastern. And Kyle's from last night should be posted soon if it's not already. All right, much anticipated Megan, our vegan friend here. I'm just kidding. I give her a hard time, but awesome chef. I can't wait to have her cook for me one day. 8 o'clock this evening will be her first strategy webinar, and that is going to be about using larger time frames to catch bigger moves. Next vegan webinar. Are you gonna do a second hour on the cooking beans especially? And then next, oh hell yeah, there you go. And then next week we've got Peter 8 p.m. Eastern on Tuesday talking about determining the right share size for yourself. No Beyond Meat, Megan. It's not allowed. I will revoke your webinar access. Let's see here. Psychology webinar. Vegan's fine, not beyond the meat. We all know this. Tomorrow night, 5 p.m. Eastern. Actually, that should be 8 p.m. Eastern, Mike, I believe. Tell me if I'm wrong on that. Need to correct the time. But anyway, tomorrow night, handling the pressure involved in trading by Mike. And then next week, probabilities part 3, how to trade in strategy sets. Mentoring 11 a.m., 4 p.m., 8 p.m. every Thursday. Thank you, Mike. I'll get it fixed. StockTradingSimulator.com. Don't forget, it's our free web-based trading simulator. Go check it out. You can sign up for homework assignments. You'll get them a couple times a week from Eamon. And also, Eamon put up a new tutorial. It's on the YouTube page. There's been a number of updates and changes to the simulator as we've released it in its bare form. We've added to it and everything else. So he put out yesterday a new video that discussed some of the new features and changes there. All right. Don't forget about the test drive. If you're watching on YouTube and haven't been in the room, use the promo code PREMARKET24. It'll get you a discount off the intro membership. It is 7 calendar days, 5 trading days. It does not auto-renew or recur. You have to actively go choose to become a member if you'd like to do so. And speaking of, you can become an annual elite member at a discount. Use the promo code LUCKY50 to do so.
All right. Thank you very much, Norm. Guys, let's get to our list today. We have, at the moment, we have Baba in here. We have, which is looking pretty good. We have Neo. How many we have? 1, 2, 3, 4, 5, 6, 7. So you have one too many. We'll get rid of one in just a second here. Neo is good. Mrna, I'm definitely interested in today. Looking real nice there. And Nike, yeah, Nike's good. Apple is really good this morning. Looking nice. AMD might need to get pushed down here.
Break Peter's heart.
I know. He's not on the mic today. That's okay. I did have it on the list.
Is he not?
No, I'm saying he's not like with me doing the show.
Oh, with you covering?
Yeah. The day he did the show, I put it on there, even if it didn't look well. I put it on him in his honor.
Then rip his heart out of his chest and stomp on it, Pete Carlos.
It's a top possible. It's right up there, top possible. So, but that's what we have. Let's get to some levels, guys. We'll do this quickly because we'll do some Q&A. We have some time today. So think about questions you guys might want to ask this morning. Higher the pre-market on Bob. We're looking at 114. We'll slam a level right on there, guys. This thing really strong, up 10%, 1.8 million shares traded. 110 is the low of the pre-market on this one. So we'll put that there. And then below that, guys, we have highs and lows from the last 2 trading days between 105 and 100, doing a pretty good job. If we continue on this breakout, let's go back here and look at the daily and see where we can find some areas of support and resistance. And quickly looking at this, you can see here, there's a nice level here at 118, right? The few times we kind of came down here, we found some support here, here, and here. And notice how all these days are gap downs, right? So gap down, gap up here, gap down here to this level, gap down here to this level as well. So interesting how that's happening there. And then we have a couple of days showing some more support and resistance around this area here. So again, that 118 might be 119 once you get really into the details there, but that 118.55 area, definitely a major level for Baba as the way he's trading. It's funny, I was looking at the analyst upgrade, or at least their target price is like 200 and something on this stock. So interesting to see how that's going to go with a strong buy. We'll see. 127.53, another level in case
that's probably because there are astronauts in their bank they need to get up there and rescue.
There's people stranded up there that need recovery.
And they're like a desk or two over from them.
I'm telling you, man, it's just if you guys have not seen the Chinese Hustle, make your business to look at it tonight.
China Hustle.
China Hustle, yes, it is. It is very, very interesting stuff there, and some of it might be going on right now. I mean, we see it, Norm, right? We saw it with a couple of these.
What's going on right now. I'm not saying it's happening in Baba or any particular ticker,
right,
but there's definitely fraudulent activity in Chinese stocks.
Yeah, absolutely. So it's just scary stuff, my friends. The worst part is when you see these older people with their retirement accounts that got hit, that took a loss. That is just heartbreaking there. All right, so that is Baba, guys. We're all set there. Let's take a look at Neo.
Yeah. Let's be honest.
Yeah.
There's fraudulent stuff everywhere. Enron was not a Chinese company. And 2008 financial crisis, there were companies doing shady stuff here too. So, China's renowned for cooking the books.
Wherever there's greedy folks, which that doesn't discriminate between any type of country. There's going to be that stuff happening. Trust me. Here's Neo, guys. Neo this morning, looking okay. We're looking okay. I have it on here. Let's see where it goes. Towards the bottom, low of the pre-market, we're sitting at 2054. High of the pre-market up here around 2107. Then we have this great area of resistance up here against this 2 days here, 21, might be 21, actually 2107. Yeah, it might be right in that area. A lot of resistance happening there. If they were to break out, let's take a look at some levels here. We have a good one all the way up here at 23. A lot of areas of support and resistance. Midpoint, we do have about 3 days around 2215. Not a major level, but we got a couple on there. I like this level too because, again, if we do decide to rip higher, I think we're not going to go from 20 to 23 without making a couple of stops here. 2315 might be one where we kind of rest a little bit there. And then just in case we go to the moon here, 22, 24, 92, another level there on the daily. You can see that right there being tested a couple of times towards the upside as resistance and a little bit of support as well. Towards the bottom, you're set, guys, highs and lows from the last 2 trading days. Here is Mrna. So towards the bottom, highs and lows, doing a pretty good job. Even your low of the pre-market slamming against the previous day close there. So you're pretty good and set there. Towards the top, it looks like we might be breaking the high of the pre-market now. I'm going to mark it for now. 29.25. We'll see if we're able to get above that. And then if we go and look on the daily clearly, this level here, 31.40, 42. I don't see any major level in here. This one might be a minor one, 30.23, but it's not a good one like this one here, right? This one is a very clear one, it's 31.42. So we'll leave that as is for right now. Pretty much set there. Here is Nike, guys. Nice gap up this morning, real strong today. Ed posted a nice picture of his trade yesterday on Nike. The monster trade there, 138.82, high of the pre-market, 136.20, low of the pre-market. And if we look towards the top here, nice level right here at 143, right? Good area of support happening there. And then we also have above that, we have another level at 147, just in case we can get moving. You know, Nike can move very well, but I don't know. I have a feeling the few times Nike has gapped up, it usually ends up selling off. I don't know why, but I got a little bias on that. Not saying that's what's going to happen, but we'll see. It seems that way when I watch Nike on these type of earnings plays. Here it is on Apple, guys. Strong daily the last couple of days. Look at hits 150. The smart people bought here, and they're sitting pretty this morning at 165. Today, towards the bottom, highs and lows from the last 2 trading days. We're going to be putting here 168.73. Good level there of support and resistance. And then right up here, we have another one too. Great area of support around 171.58. So that looks pretty good there as well. So you're all set there on Apple. Here is Oxy, the last one on our list. Towards the bottom, you have plenty, including this gray area of resistance that can now become support at 58. Our pre-market high is a little bit higher than that, sitting around 59.25. So we'll mark that there. And then the pre-market high is going to be 61.56 there. And that's about it. I think this is our 52-week high right now, guys. It's not the all-time highs. It's all the way back there, like 2019 or 18. I can't remember, but I'm not going to go back there that far. I'm going to keep just these levels here for now on Oxy. So, all right, that is our list, guys. We got a couple of minutes, 9:07. I see our moderators are getting their list together, and I think they all have Baba on their list. Yep, they all have Baba on their list. So Baba heavily in play this morning, guys, looking pretty good. I see everyone likes that one. So we'll take a look at that list in a second. But yeah, what kind of questions you guys have? We have a little bit of time as we're done a little bit early. Since we have time, I would like to bother our people over at YouTube for a thumbs up. Really appreciate it. We're sitting at 171. If we can get to 250, we are happy campers over here. So thank you so much for that. What is Jivo low flow? No, I'm not sure what that is. Baba, yes, Baba does have a decent size spread at times. I've seen it as high as 50 cents when I've been calculating to take a trade on it. So I planned for that. You take less shares. If you guys seen some of my trading last week, I took like 200 shares on one position, 300. So you take less shares, right? Also, aside from that, it can move a lot, right? It can move, $2-3 on you. Yesterday, I didn't catch the whole move, unfortunately. But look at the drop yesterday, guys. I mean, on Baba, You did not need to take a whole lot of shares. I posted this trade on Twitter. I got in here and got out here, right? This was a $1.50 move, but this thing went down to 99. So it moved. Total move was almost $5 and change, right? Don't need to take a whole lot of shares for Baba just because of that. And their spread at times can be a little bit on the wider side for a stock that's 113. Yeah, so you want to be careful of that. But I think it's still a great trader. I think is in the last couple of days with all the Chinese news has moved very, very well. Hence the reason I'm not alone in that thought, because look at our moderators lineup. I think everybody has Baba on their list except for Megan. But Megan is special. It's okay. Just kidding, Megan. All right, so yeah, so I think it's still a good trade for me, a good one to watch.
So I'm just curious, Megan, why did you keep Baba off your list? I'm not criticizing you. I'm just curious. Just tell us whenever you get a chance. Okay, fair enough. Doesn't see a good range in play. Here's a perfect example. I mean, she has a specific style she trades. Every one of us is a little bit different, and it doesn't fit her strategies. So she throws it to the side.
That's it. Eamon is the same way too, right? Eamon has a very specific approach. He has his the stuff that he likes for, and he actually goes in with a bias, right? I don't like to go in with a bias, but he does. He goes in to his trading with a bias of, hey, I want this stock short, I want these stocks long, and that works to him. He's an amazing trader. So this is why the market is so difficult and interesting at the same time, because there's so many things you can do that can work, right? There's not one set way, and there's not just a few set ways. There's so many set ways that you can make money in the market, which makes it interesting and amazing at the same time here. What do you guys think about GEVO? Yeah, someone mentioned this in chat as well. Let's take a look at GEVO this morning. I mean, you don't have a lot to go by right now. You had this one pop from $4 to $5.40. Any entry here, unless you have a strategy, is more of a gamble, to be honest. So you just gotta. At least for me, I don't have a strategy. If you have a strategy, you're not gambling, right? If you have an edge here, if this is part of your edge, say, hey, if a stock does this, pulls back and does this and does that, I can get in here and that's my edge, then you're not gambling, right? But if you're just getting in here because, hey, it popped up this much, 18%, it can go another 20, without a strategy, then you're gambling. And can you win? Yes, you can win big, but on the long run, you're going to lose big. You're going to lose more.
If you like trading $5 stocks, it could be interesting. They did just get news that's popped it up. Deal with Delta, I believe. I heard go through the lines a minute ago. I think in the last 4 years I've traded a sub $10 stock maybe twice.
Yeah. So,
and they were very, very special circumstances. Remember what was? Can't even remember the ticker off the top of my head, but it was like 2 or 3 years ago. You and I traded it together, Carlos. It was one of the drug manufacturers it was like 80% short float, $3 stock that was involved in the opioid stuff, and it squeezed like a beast.
Oh man,
MK. Yep. Thank you, Jared.
Wow. Yeah, you took it back there, man. Yes. That was a good one. That was. What are they up to now? Are they even in?
I think they're bankrupt and gone.
They're bankrupt, right? Yeah. This was that was a good one. Ford. Curious about Ford. I'm not sure. Oh, you're asking Peter why he has Ford in his list. Okay, wait for him to answer there. All right. PIK. Yeah, PIK is what are they doing?
So, yeah, we already went over that one.
Yeah, we were.
So, Jason, yes. So the reason that Zim is up in DAS and down on the Gappers list, they had a special dividend. Today is the first day without the $17 dividend. So you have to really actually adjust for that. Yeah. If the previous day close minus $17 puts it at 71.01 for the previous day close. That's the reason it's like that. So it's actually up 5.3, not down 15%.
Question here by Jeremiah: is there a reason why you all have rarely indexes in play? You know what, we do trade. I know, well, not me personally, but some of the moderators do trade the indexes. I do not. If the index is moving for whatever reason, whatever index it is, I just look at the underlying stocks that are in play off that index, right? So you could do it that way, right? So that's what, for example, if tech, right? If tech is moving and and so forth. I know I'm going to look at Apple. If oil is moving, I'm going to look at Oxy. So I know the underlying stocks that I prefer to trade. Some people like to do the indexes and they like to trade leverage, right? And you can do very well with that, but that's just not my gig, right? But you can't do that. That's the way to trade, and if you do it properly, you can do well too.
Somebody's asking, what are the R and S levels members are referring to? They're pivot points. Specifically, a lot of people in this room use Camarilla pivot points. They are calculated based on previous prices. I won't get real deep into it. I don't spend a ton of time on them. You can either read about them or later in the day that somebody can explain them to you.
Yeah, and I know Thor has a couple of videos as well on this. Question here: what do you think about Fibonacci on intraday trades? 5-minute entry. Which one is better, retracement or extensions? I don't use that strategy, so I can't comment on it. I think all indicators are great, right? Indicators are great. You just got to find the ones that can complement what you're trying to do, your strategy, your time frame. What you don't want to do is, keep bouncing between different strategies or different indicators to find the secret sauce, because you're not going to find it. I'm not saying you're doing that, Nora, but that's what you do not want to do, because there is no secret sauce out there when it comes to indicators, right? And you don't want to have so much indicators on your chart that you are, contradicting the actual play, and you're having this analysis paralysis, but I don't forget the term, but you don't want to be over analyzing, your charts.
Analysis paralysis.
There you go. Yep. So you just want to be careful not to be doing that. But I think all indicators have their value, and depending on what strategy you have, they can fit well. Daniel, unfortunately, we do not offer that anymore. All right, guys, let's take a look at 9:15. So let's take a look at our moderators lineup. Let me resize this over here and bring this over for you guys so we can see what our moderators are looking at this morning. Here we go. All right, excellent. Let's start over here with Jared. Jared's looking at BABA, XBEF, BTC. Bitcoin is definitely in play today. We got a couple of Bitcoin stocks. Right, so here's another one, right? You can look at BTC, Jeremiah, or you can look at Mrna, Neo, Riot. Not Neo, Mrna, Riot, and some other ones that are underlying stocks with Bitcoin. Secondary, ZIM, ZIM, CCL after earnings today. We'll take a look at there and the Qs. Susan will be looking at BABA and Mrna, so looking at those two right now. And secondary is BA and Oxy. Mike looking at BABA and NVIDIA and Nike. Dima is looking at Nike, BABA, and Oxy and Apple. Tiffany will be looking at BABA, of course, Nike, NVIDIA, and secondary is Tesla. And again here, BABA as well for Thor, Apple, BA, Nike, AMD, and Twitter. And Megan will be looking at Facebook, Nike, Oxy, and Netflix. IPOs for today, none at the moment. Got some information there from Peter. You can look at his list: AMD, BABA, and Nike, and then secondary list TME, Ford, and CCL. Here's Brian's list coming in with PDD, Oxy, JD, DVN, and also UNG for Brian this morning. No BABA for Brian, I'm surprised. And then here is Eamon. Eamon, as I mentioned before, look at his style, right? He has his longs, XON, and maybe TSM, and potential shorts, FUBU and TLRY. So, guys, over on YouTube, thank you so much for joining us this morning. If it's your first time here, guess what? We will be live again tomorrow at 8 a.m., starting with Engineering the Markets, as Jared takes us through the overall market. And then Norm and I will jump on at 8:30 and kind of get you through your gappers list and set up our fine-tuned list that we have over here. So consider subscribing so we can see you tomorrow. If you haven't done so yet, thumbs up to get us to 250. We appreciate you there. And have a great day, guys. Trade safe, and we'll see you tomorrow. Have a good one.
Take care, guys. Trade safe.